What's going on, everybody? It's November 10th, 2022, daily log episode number 49. And today we're going to cover actually ES today. Same thing as US 500. ES is just the futures contract for those who are newer to trading. The reason I'm kind of switching feeds is just because I find it a lot cleaner, especially after the last couple of weeks with the news drivers. There's just been too much funky price action within the indices feed that I just don't enjoy. So I'm going to be using this from now on. It's the reason why there's no annotations on the chart. So today was a great learning lesson, something that I think if you're newer to the trading atmosphere, you got to see how what we would like to call manual intervention. Now, what does that mean? That, to me, from what I've gained from ICT's knowledge, is when central banks inject liquidity into the market and they manually do it. They manually override, I guess you could say, the algorithm. And it's only for, news event driven. And that's the reason why we sit on the sidelines and we wait till the dust settles and then we kind of go in and try to pick our shots. And today, was completely off of my analysis, and even ICT was coming in the morning still looking at the exact same areas, the fair value gap, still looking at liquidity, and he was even wrong on it. And that's just why you stay out of these conditions, because if you're in the way, you will get eliminated. And I stated in the chat today that you shouldn't feel any type of emotion. Like, yes, price moved a lot today. Do I feel any emotion towards it? No, not at all. Why? Because the market is ran by an algorithm and it has no emotion. It's a robot. It doesn't care about you. It doesn't care about your problems. It doesn't care that you waited a whole week to try to catch a setup and then it just failed. It literally does not care. It doesn't care you have to pay bills. So the reason I'm saying that is because sometimes you can get so hyper focused on, like, damn, man, I wish I caught this move today. It would have, it would have paid my bills, or would have done this, would have passed this challenge, and would have made me, felt successful. If you get into that hyper focus on one trade, one day, 1 week, or even 1 month, trading results, that can really hinder your performance because you start to get that hyper focus that it's a make or break it. Like, if this trade doesn't work out, I'm a failure. And I used to think that same way, and that's the reason why I'm stating it, so heavily, because I've felt the same way so many times before. And up until this year, I used to have so much tilting problems. Like, every single time I lost, I would go on a tilting rampage. I can't tell you the amount of times I've failed challenges just purely off of tilt. And it's funny, you'll tilt and you look back at the day and you're like, man, what was I thinking? There was nothing in the chart. There was no setup there. And that's how emotions override your logical thinking. So you really have to bring it back to logic and reason and understand that if you look at the long term, if you look at your yearly results, not even a week, month by month is something to really gauge your performance. But I even think having a semi-bad losing month is not that bad in the overall aspect of things. If you look at trading, your trading results in a 6 month to a year perspective, it can kind of help ease off of the pressure you feel that you have to, every single trade has to be the one. So the reason I'm just saying that because how much price moved today, and we were even off on our analysis, which is completely okay. I've told you guys so many times that you will get the narrative wrong so many times, but the model will protect you from that. The model will protect you because if the narrative no longer aligns, the model isn't going to form regardless. So that's a whole different discussion. Looking at today, we went ahead and ran out the buy side liquidity, resting at 39.28 on futures. We're now driving up into the SIBI here. So I think that's our draw on liquidity. I believe we're going to draw up into there. I don't know whether that's obviously tomorrow or the next week. We do have a daily bullish order block. It is quite a ways away, so I highly doubt that we will respect that or come back down into there before, driving higher. Looking at it, this is another kind of, I guess, point of view. Anytime you're wrong it's usually just because you're perceiving the algorithm wrong. You're perceiving order flow wrong. It's you, the trader, who's analyzing it incorrectly. We simply analyze the market incorrectly. It doesn't mean the market's broken. Doesn't mean the concepts don't work. Doesn't mean that the model doesn't work. It's simply you perceiving it incorrectly. So the way this played out is simply we had a shift in market structure above the high here. We retraced back down into a discount. We used a bullish order block reclaim, expand that out in time, and then we expanded higher. Looking at the 4-hour time frame, we took out sell stops here. Retrace back into that bullish order block, extend out down close candle in time, retraced into a discount. And then last night we dropped down, took out a lot of sell stops resting there, retail traders with the trend lines, and then we expanded higher, okay? There was no reason to ever even buy this, nor if you were in a live account, you probably would never get filled. And even if you, on the flip side, you went short, you probably would have been, you know, not your stop loss would have not have ever been respected. Your broker would have took it for slippage. I can't tell you the amount of times in the beginning years that my broker would stop me out 40, 50 pips past where my stop loss was at when I was trading Forex, and how much that would devastate me. So, and it happens on days like this when you have high impact news drivers. It's the reason why we stay on the sidelines. And even when I was saying that this 4-hour and the 1-hour for value gap was my point of interest, I'm still waiting for the news driver to take place. I'm not setting a limit there prior to the news driver. You all should probably know that by now. So if we dig down deeper, there was a good amount of buy side liquidity resting above the highs here, which did concern me a little bit. I did not see this move at all. I don't think even ICT was really expecting the bullish movement. I know coming into the session, he was still looking for the same area we were looking for, which was cool to know. If you're listening to his live ICT, you know, Twitter space, it was really cool to watch him basically forecast price in real time and basically walk you through what order flow is doing. And in a sense, that's what I'm trying to do. Obviously, I'm doing these daily logs for myself, but in a sense, that's what he's always done for mentorship. It's never, you know, cookie cutter. Here's a 5-minute video on how to, you know, define a model, and there you go. It's all set. It's always day after day, grinding week after week, month after month, year after year of just having somebody hold your hand, reading order flow, telling you where price is going to go, telling you when to stay out, etc. So after the news driver released, he was talking about on the Twitter space to just basically pay attention to the 1-minute time frame is where we were all at that time. So it's really cool to kind of watch him forecast price. I know he had on a higher time frame, he had a volume imbalance, and I believe that was coming all the way from, if I go back here, I believe he was using this volume imbalance here. Okay, so what I was paying attention to while he was talking was the buy side liquidity resting above the highs here. So buy side liquidity, relative equal highs. And I was honestly aiming for that. He was possibly looking for shorts. I didn't really see that on the table for us. I thought at this point we were just going to expand into the buy side liquidity. I thought that was a pretty clear objective for us. So looking at that's a buy side liquidity. Keep that in mind. Extend this out in time. He first noted this fair value gap resting here, and I post that in the chat. And he said if we dig past that, if we close beneath that, then possibly we could start looking for shorts. We ultimately never did. So price ran up, displaced lower. And then he even said not to trade this fair value gap resting here, if you guys were watching it live. Reason being, he thought we could drive up higher into the volume imbalance, which ultimately we did. Price returns lower, expands higher, and then I believe he called out a trade here, which I was perfectly okay with just sitting this one out. I didn't have any reason to really take any long stay. I think we were just too deep in a premium to really want to chase this thing. I would rather just sit on the sidelines and wait for something more clear, maybe tomorrow. But price dips down to this fair value gap. You have your order block here. Extend that out in time. Touch that, expand higher. If you look at the volume imbalance, we touched the premium end there. So that's basically your take profit. If you go on his Twitter, he has executions on there. And then if you look at, let's say a 2-minute here. Oh, here it is. Here's the market maker buy model. So this was coming into the PM session. I actually thought this was, I reviewed it, I was away from the charts. I thought this was a decent shorting opportunity. So we're at the buy side liquidity resting here. We ran that out. We displaced lower. We have a shift in market structure underneath the low there. And then from a 5-minute, we have a fair value gap. Nothing on the 4-minute, which is okay. I'm usually okay with not having a 4-minute. 3-minute, there's nothing there. 2-minute, there's a small fair value gap. I really wouldn't call that a fair value gap, but it is something that does align with the 5-minute. You have your bear shorted block there, and then you have a 1-minute as well. It's not the best shorting opportunity, but I'm just trying to highlight a opportunity you could have got into. Ran out the buy side liquidity. We had our shift in market structure underneath the low there. Turns into a premium, and then we drift lower. And then if you look at this, it is a market maker buy model. So you have, let's see here. You have the sell side of the curve, and then you have the buy side of the curve. So I believe on a 2-minute, there was a possible entry, maybe a 3-minute. Price retraces, never gets into that fair value gap there. Nothing in here I would have went long off of, to be honest with you. Small little fair value gap resting there. We dip into and trade higher. Yeah, there's nothing in here I really would have liked to go, long off of, and even off the context that we've been in such a deep premium, meaning that we've been just escalating higher and higher all day. I really wouldn't be comfortable taking longs. I'd rather be, looking for shorts. It's the reason why I stated, to me, this would have been one of the better opportunities for me today. And then ultimately we've just been grinding higher, and these are the type of conditions that can rise a lot of emotions in you, because it feels like you missed out on such a large move. You see other people on Twitter, catching these moves, even though I know majority of 90% are all demo fake traders anyways. So don't feel bad that you missed out on this. I think it's great that it happened today, because now hopefully this gives us a really clear view on where price is going to go. Like I said, this is going to be our draw on liquidity resting here. I wouldn't be surprised if tomorrow, if we can dip into that, I think we can get a TGI Friday trade, meaning set the high of the week tomorrow during the New York session. I would rather be looking for shorts tomorrow. That's what I'd be looking for. I'd be looking for price to dig into that SIBI there, and then maybe on lower time frames we get that model forming, and then we can kind of go short to close out the week. I'd be looking for very, very low 10-20 points, just to kind of stay nimble in these conditions. After a large range day, do expect small range days or consolidation. So that's something to point out, especially the way we've moved. We have a large BISI here, or fair value gap, that we can return back into. Same with this one. And I even know on lower time frames, there's a huge volume imbalance, meaning that there's no trading that even happened. ICT was talking about, which is a pretty good high probability area for you to target and look for price to return back into. Not saying that's going to happen tomorrow, but eventually at one point, I believe we will. So I think that's going to be it for today, you guys. Like I said, it's been a hard couple weeks, and this is what trading is really all about. It's not that fun at times. Like, it can be very, very exhausting to constantly analyze these markets, get things wrong, lose trades, and still not come out with profit, not come out with the model forming. I completely understand. It's part of the game. That's why your risk management, your money management has to be on point during these times. Your frequency of trade should be lowered by 50% at least. Like if you're taking, let's say, 6 trades a week, it should be cut down to 3 during these times. And what I mean by these times is high probability or high impact news that go back to back to back. So we had FOMC, NFP, elections, and now CPI. That's 4 major news drivers from last week and even this week, which can create a lot of low probability times. So you already know this ahead of when you're trading. You can see it in the news calendar. So you should mark that out in your time and your planner. And be like, okay, I should lower my risk. I should take less trades, and I should expect less precision. And that's exactly what I did. Okay, so till tomorrow, I'll talk with you guys. We'll see what potentially forms and see if we can end off the week with a good trade. And that's going to be it. Good luck and good trading, everybody.